Venture capitalists have invested billions of dollars in fast grocery delivery services such as Turkey's Getir and Germany's Gorillas and Flink, in a race to meet soaring demand after lockdowns. Now Amsterdam and Rotterdam have slapped a one-year freeze on new so-called dark stores, and other cities could follow. At issue are the hundreds of small distribution hubs for on-demand groceries, where workers zip in and out on scooters, prompting complaints of disruption and nuisance, complicating the loss-making company's efforts to scale up and become profitable. Like Getir, founded in Istanbul in 2015, which raised more than $1.1 billion in capital last year. General Manager for Europe, Berke Jager, said the company had created 1,500 Dutch jobs so far.
If a freeze to be continued for a whole year and so on, obviously it's a young industry that's growing. It will affect our ability to serve our customers in the best way. And we also create a lot of jobs in the neighborhood at local level that will obviously affect that industry's growth with employment creation too.
Other cities could imitate the freeze on dark stores, in the sort of challenge Uber and Airbnb have faced in Europe. Amsterdam's deputy mayor, Marieke van Doornink.
We also took the comparison with Airbnb, and we noticed as a city government we were quite late in our response, and the nuisance in the neighborhoods and the annoyance was already so big that we didn't have lots of instruments to actually do something about it. So with this new development with the dark stores, we decided to not wait till everybody was angry, but to make this pause, to make this break, in order for us to be able to make a policy. Because we have seen the negative effects of these new economies entering our city.
Complaints include restocking and delivery going on 24 hours a day, as well as traffic hazards from racing scooters. The three largest fast grocery companies in Amsterdam, Flink, Gorillas and Getir, all pointed to customer satisfaction with their services. They say they want to work with city officials to resolve the problems. Solutions that may hurt already thin margins would be operating during restricted hours or making extra space for couriers and their vehicles inside the tiny stores. The one-year freeze, coming just after the companies received huge amounts of capital, could torpedo their efforts to grab market share.
Under Armour on Friday joined the chorus of companies lamenting supply chain issues, warning that higher transportation costs would squeeze its earnings in the current quarter. Shares were down roughly 10% in midday trading after the athletic wear company flagged reductions to its spring and summer orders. Product availability has been a concern for Under Armour and its rivals Lululemon Athletica and Nike, as Asian factories that make their clothing are only just recovering from COVID-19 outbreaks and employee shortages. On an earnings call Friday, Under Armour's chief financial officer said the company expects supply issues to continue well into fiscal 2023. The company has been forced to use pricier air freight due to port congestion as it strives to stock its shelves, with demand for athletic wear still strong. Like many companies, it's raised prices of its products to cover higher costs across supply chains, from labor to raw materials. The silver lining was that those higher prices, along with robust demand, did help Under Armour post better than expected results for its critical holiday quarter. Wall Street stocks ended sharply lower on Friday for the second straight session as investors fretted about deepening tensions between Russia and Ukraine. The Dow dropped 1.4%, the S&P lost 1.9%, and the Nasdaq finished down 2.8%. With investors already worried about inflation and rising interest rates, selling on Wall Street accelerated after Washington warned that Russia had massed enough troops near Ukraine to launch a major invasion and that an attack could begin any day. But Christian Ledoux, director of investment research at Cap Trust, says a conflict would likely bring little disruption to the U.S. economy.
Russia and our response to Russia really won't have too much economic impact to the United States. They're not a large trading partner with us. Europe is, and Europe could be damaged to some extent with a protracted conflict with Russia. But I think more investors are focused on inflation than that situation in the Ukraine.
Among Friday's movers, Under Armour slumped 12.5% after warning that its profit margin would be under pressure in the current quarter due to supply chain issues. But online real estate platform Zillow jumped 12.7% after beating Wall Street estimates for quarterly sales, boosted by an 11-fold revenue increase in its home segment. Wall Street's latest sell-off follows a slump on Thursday when data showed consumer prices surged 7.5% in January, the biggest annual increase in 40 years. Comments from St. Louis Fed Bank President James Bullard about aggressive rate hikes have also rattled investor sentiment. For the week, the S&P fell 1.8% and the Nasdaq shed 2.2%.